Hello friends, how are you? I hope you all are doing great, and I really hope that you enjoyed the first lecture on the basics of costing, and you must have shared it with your friends also. So let's have a quick recap what we have done so far. So what we understood was the basic terminologies like what is cost, right? We discussed about then the meaning of costing. Then we talked about the terminology cost accounting, then cost accountancy. Then we discussed about the objectives of the cost accounting and cost reduction and cost control. So all this we have done, and I really hope that you have understood it in a very good way. I've tried to explain in the easiest of the manners, right? Now, what we are starting today is what we are starting in this lecture is very important. This is the real base of cost accounting, right? All these concepts what we are going to discuss now are going to be used in the next chapters, right? This is the base. Now let's start with the important topic, that is elements of cost. Now, what do you mean by elements of cost? As you can see here, I have written three elements, that is material, labor and expenses. Try to understand with the help of an example. Say you want to construct a house, okay? Now tell me, what are the basic and the most important elements for the construction of a house? Say you call a contractor, contractor sir, I want to build a house, please come to my office. Please come to my house. Okay. He comes to your house, the deal is finalized, and he says, okay, tomorrow we'll start with the construction, I'll send the labor. Okay, the next day labor comes. Now, just tell me one thing. The material is not there, the bricks are not there, the cement is not there. Can the labor start with the construction of the house? Can the labor start with the construction of house? No, sir. Without material, how can they start with the construction of the house? So first and the foremost thing that is most important for anything to start is the material. That's why I have written the first element that is most important is material. This is the first element of cost. Without material, you cannot start with the construction of a house. Without material, you cannot, make a t-shirt or a shirt. If you are a shirt manufacturer, without material, you cannot do anything, right? Without the study material, can you pass the exams? No, sir. You need the study material. Okay. Now, the second thing, now the material is there on your site. You have the bricks, you have the cement, everything is there. The labor is not there. Can you start with the construction? No, sir. So after material, what you require is the labor. You have the cloth for making the t-shirt, but you don't have the labor who can do that. Can you then make a t-shirt? No, sir. So the first element is material. The second element that is important is labor. And the third one is expenses. See, when you start with the construction, the material is there, the labor has come, they have started with the construction of the house. Okay, now this labor obviously needs some refreshments, some tea, coffee, biscuits, everything. You will have to arrange for that for the labor, obviously, sir, right? The expenditure on those things is what is expenses, right? So these are the three major most important elements of the cost, that is material, labor and expenses. Okay. Now we can further classify these elements of cost into direct and indirect. So what is a direct cost and what is an indirect cost? I will explain you in this very lecture only, right? So I have divided material into direct and indirect, right? I have divided labor into direct and indirect. I have divided expenses into direct and indirect. All the direct cost is known as prime cost. All the direct cost is known as prime cost because it is the most important cost without which you cannot start with anything. Clear? All the indirect cost is known as overhead cost. That's why I told you in the introduction lecture, the three very important chapters, the three chapters which are the heart of cost accounting. Remember all the three chapters. The first is material costing, second is labor costing, and third is overhead costing. So the three chapters, first one is going to be our material costing after this. Okay, material costing, second is labor costing, and third one is overhead costing. So these three chapters are the heart of cost accounting because these are the three important elements of cost. Okay. So you have to remember this. All the direct cost is known as prime cost. Prime means most important cost without which we cannot start with anything. Okay. All the indirect cost is known as overhead cost. Why it is called overhead? What is to be done? We have a separate chapter on this, that is overhead costing. Right. Chapter number 4. Clear? So these are the three elements. Now let's try to understand what is a direct cost and what is an indirect cost. These are the most important things because these things are going to be used in the numericals also. In all the chapters of cost accounting, we are going to use this direct cost, indirect cost concept. Okay. So try to understand it very carefully. Listen to it very carefully. What I mean to explain. Okay. I'll explain it with the example, so nothing to worry about it, but just listen to it very carefully. What is a direct cost? It is a cost which can be identified in 1 unit of production. 1 unit of production means, this production means 1 unit of finished good. 1 unit of finished good produced. Right? So any cost which can be identified in the 1 unit of the finished good is known as direct cost. For example, let's take an example. You are a shirt manufacturer. You want to manufacture a shirt. See, for the shirt, two things are very, very important: fabric and buttons. Without these two things, your shirt is incomplete, isn't it? This is very basic. Now, can you identify that in making of one shirt, how much of the fabric is required and how many buttons are required? Can you tell me? Yes, sir, we can tell it with almost accuracy. You go to any shirt manufacturer, you ask him, sir, in the making of shirt, how much fabric is required? He will tell you. He will tell you how much is required. 2.25 meters, he will say, or 3 meters, he will say, or 2 meters, he will say. Right? How many buttons are required, sir? In one shirt, we put on 6 buttons. So he can tell you exactly the number of buttons and the quantity of the fabric in the making of one shirt, right? In this example, we can identify that in making one piece of shirt, how much fabric is required and how many buttons are required. So for one piece of shirt, we can identify the cost of fabric and cost of buttons. So this cost of fabric and this cost of button is my direct cost, right? This shirt is my what? This is my finished good. So in making 1 unit of the finished product, this is my finished good. So in making 1 unit of the finished product, I can precisely identify the cost of fabric and the cost of button. Any doubts in that? Right? So this is my direct cost. Okay. So you need to remember this thing, this direct cost, very important, sir. Right? Any cost which can be identified in 1 unit of finished good produced. Next, what is an indirect cost? It is a cost which cannot be identified in 1 unit of the production. Again, the production means 1 unit of finished good produced. Okay. So direct cost is any cost which can be identified in 1 unit. Okay. And indirect cost is which cannot be identified in the 1 unit of production. That is my indirect cost. Let's see the example here. Now, again, you are the same shirt manufacturer, right? For manufacturing the shirt, you have the machines which run on electricity. Now, can you tell me, there are hundreds of shirts which are being made on that machine, and the electricity starts from in the morning 9 a.m. till say 6 p.m. right? When the workers arrive, they switch on the electricity, they switch on the bulbs, they start the machines. Okay, from 9 a.m. to 6 p.m. Now, can you tell me that how much electricity is being consumed in making one shirt? There are hundreds of shirts being made together on the machines. There are 10 machines on which 100 of shirts are being made. Can you tell me precisely? Not by dividing with the number of shirts. I say, can you tell me precisely how much of electricity is being consumed in making one shirt? Sir, how can we tell that? There are hundreds of shirts which are being made on 10 or 12 machines. There is a bulb in your room. Say, it's a simple example. In your house, there are say 6 lights, right? And your monthly electricity bill is say 10,000 rupees. 6 lights and say 2 AC, air conditioners. Okay. Your monthly bill is 10,000 rupees. Now, can you tell me, distribute this 10,000 between the 6 lights and 2 AC? that how much of this 10,000 belongs to these 6 lights and how much of this 10,000 belongs to these 2 air conditioners? Can you do that? Right? If you can do that, then you do not belong to this planet. Simple. If you can distribute this 10,000 between the 6 lights and 2 air conditioners directly without any procedures, if you can identify directly, then you do not belong to this planet. Very simple, right? Similarly, we cannot identify how much of the electricity is being used in making one shirt. That is why it is called an indirect cost. In this example, we cannot identify how much electricity is being used for manufacture of one piece of shirt. So electricity is an indirect cost. So electricity becomes my indirect cost. Clear? Any doubts? So this is very, very important. I'm again saying again and again, this is direct and indirect cost. So the difference is given in my handbook between the direct and indirect cost. Okay. So product period cost, you can read on your own. Very simple. Explicit and implicit cost, very simple. Now I'll come to fixed cost and variable cost. So this is your fixed cost. Now, fixed costs are the costs which do not change with the change in the level of activity. Okay. I've given some of the examples like rent, loan payments, salaries, insurance premium. What are the typical fixed costs? Okay. Now let's take a very simple example. Say a young couple, a newly married couple is staying in the Bangalore. In Bangalore, they're staying in a rented accommodation and the rent being charged is 20,000 rupees. Okay. Now after a year or so, say after a year or after 2 years, they are blessed with a baby. Now just tell me one thing, with the arrival of the baby, will the landlord charge additional rent for that baby? No, sir. Why will he charge additional rent, sir? In fact, he will give 2100 shagun. Isn't it? Isn't it? So this couple who was staying in the rented accommodation, they are staying in the same accommodation. What has happened? They have a baby now. The family has increased from 2 to 3. But the rent will remain same. That is 20,000 rupees. So this rent which is not any cost which is not related to the level of activity, whether there are 2 members in the family or whether there are 3 members in the family or whether after say another 2 years they have another baby, right? The rent will not change. Now you will say, sir, every year there will be a 10% increase in the rent. That is a separate issue. That becomes a semi-variable cost. But some part of the rent will remain fixed. So fixed cost is which do not change with the change in the level of activity. Loan payments. You take a loan of 10 lakh rupees from the bank and you have to pay. The bank says you have to pay say 20,000 rupees per month. You have to repay. Now, how much units you are producing in your factory, what is the level of activity in your factory, right? Doesn't matter. You will have to pay 20,000. You will every month, whether you are producing 10,000 units, whether you are producing 1,000 units, whether you are producing 1 unit, you will have to pay that 20,000. Isn't it? Salary, your staff salary. You have an accountant in your factory. His salary is not determined by the number of units being produced inside your factory. Isn't it? His salary is not determined by that. He is having a fixed salary, say 10,000, 15,000 rupees per month. He is having a fixed salary and is not determined by the level of activity. Clear? Your pocket money, you get 5,000 rupees fixed pocket money. Now you spend 4,000 out of it, you spend 3,000 out of it, you save something and spend 6,000 next month. That is absolutely your problem, right? What you will get is 5,000 rupees as the pocket money, that is fixed. Whatever you do with that, what is your level of activity, you spend 3,000 rupees, you go to the restaurant with the friends, whatever you do, that is not relatable. Okay. Similarly, the insurance premium. So these are the few examples of the fixed cost. Okay. There can be many other things like that. Depreciation is one thing. If it is on the basis of time, obviously. Okay, so this is the fixed cost. Now, moving on to the variable cost. What is variable cost, sir? Variable costs are the cost which change with the change in the level of activity. Like commission bonus, wage, component parts, basic raw materials. For example, we'll continue with the same example of that couple who is having a baby now. Earlier, their milk consumption was 10 liters a month. Right now with the baby arriving, baby will also have the milk. Now the milk consumption have increased to 15 liters a month. Okay, this is what? This is variable cost because it changes with the change in the level of activity. Now after 2 years, if they have another baby, the milk consumption will increase. Now with the increase in the consumption, their cost will increase, obviously, sir. Similarly, if you are producing 1000 shirts and you require 1000 meters of the fabric for 1000 shirts. Now if you increase the number of shirts to 2000, obviously your raw material, that is your cloth, which you were earlier 1000 meters, now you will require 2000 meters. Obviously you cannot make 2000 shirts with the 1000 meter cloth, isn't it? So these are the variable cost. The cost would change with the change in the level of activity. Okay, so this is a variable cost. So these 4 costs are very, 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 very important, right? Why I'm saying very important? Because all these aspects are going to be used in the next lectures. That's why I'm saying these are very important costs. So these are the elements I have told: direct and indirect. All the direct cost is called the prime cost. All the indirect cost is called the overheads. Okay, this thing you have to remember. Always keep, whenever you are watching the lectures, always keep my handbooks and a notebook together. Okay, because some of the things you will have to write in the notebooks. So both the things should be there with you. Now, sir, is this the only cost, fixed, variable, and no, there are other costs also, like the opportunity cost is there. Okay, so there can be, one is opportunity cost. What is opportunity cost, sir? What is opportunity cost? Can anyone tell me what is opportunity cost, sir? Say you have given 1000 rupees to your friend A, right? Now, instead of giving this money to A, what you could have done is you could have deposited this 1000 in the bank, and bank would have given you 10 rupees interest. Bank would have given you interest of rupees 10, say. Okay. Now that you have given this money to A, you are losing on this income of 10 rupees. Isn't it? This 10 rupees is your opportunity cost, right? So you had the opportunity of depositing this 1000 rupees in the bank and earn this 10 rupees, but instead you have given this to A, who is not going to give you any interest, right? This is a interest free loan, unsecured loan, I can say. Even you don't know whether this money will be returned by A or not. Clear? So this 10 rupees which you are losing is your opportunity cost. Okay. So another term can be, all these are theoretical parts. These opportunity cost, this sunk cost is hardly going to be used anywhere, right? So the important parts which are going to be used in the further lectures as well as in the numericals I have covered, that is direct cost, indirect cost, fixed cost, variable cost. There is one semi-variable cost also. I'll discuss that. Don't worry about it. Okay. So what is a sunk cost? Sunk cost is any cost which has been incurred and which will not be recovered. Like, for example, I want to make a new product, right? Now, before making a new product, I do some research on that, whether that product is feasible or not, whether that product will earn me profits or not, right? So I have incurred 1 lakh rupees on the research and development. After 1 year, I decided that this product is not feasible. I will not be able to pull off this product, and it is not profitable for me. So I decided to drop the idea. Now, this 1 lakh rupees that I have incurred on the research and development, will I recover this 1 lakh rupees? No, sir. That has been incurred, right? That is a dead cost. It is known as sunk cost. Likewise, there can be other things also, like imputed cost. Imputed cost is any cost which has not actually been, implied cost I can say also, implied cost which has not actually been incurred. That means the money has not actually flown out of your pocket, but you record it as a cost. Okay. So all these things you will find in the book. I have given it there. Fixed cost, variable cost, I have explained. Other important terms: research and development cost, opportunity cost, sunk cost, imputed cost, out of pocket cost, capitalized cost, engineering. You just have to read these from the theoretical point of view. Okay. Essentials for the good cost accounting system. What are the essentials required? So these are the RBs given in the book. Okay. So these are the RBs that I have given in the book. See these, One second guys. Right, so RBs are given to just remember, like these steps are there, simple and easy to understand, accuracy of data, right, relevance of data, proactive management. So all these things are given to you people. Okay, is that clear? So you can read it from the book. One second. Okay, we are done with it. This is what I wanted to explain. Now what happened, sir, with this, we are done with our chapter number 1, that is basics of costing. So these are the few things that you have to study from the theoretical point of view. For the theory part, you have to study this. What is a responsibility center, cost center? Cost center is a unit of production, right, for which we are identifying the cost. Like I say the cost per kg, I say the cost per unit, per piece. So all these things are cost unit. So you can easily understand these things. If you find it difficult, just let me know, I'll explain you. But when you read these things, you will easily understand this thing. Okay, so with this guys, we are done with the first chapter, that is basics of costing. I hope you have enjoyed this so far, right? And we'll continue it in the same way, sir, with full on examples and your real life linkings and all those things, right? So what we are going to do in the next lecture is we'll be starting with chapter number 2, right, that is material costing. Now this is very, very important. Each and every concept of this chapter is very important, right? Whether it is from the theoretical point of view, whether it is from the practical point of view, we will be covering the numericals also. Okay, so we'll start with this chapter number 2, that is material costing. Keep your books and the notebooks ready. Okay, we'll need the notebooks also in this. Okay, so if you have any queries, you can send me an email at ksjteaching@gmail.com, and the books, handbooks and the study courses, for that you can visit our website, that is www.ksjteaching.org. The links are given in the video description, guys. Okay, and you can download the mobile app also. Some of the courses we'll be uploading on the mobile app. Okay, we'll be providing some free content also. We'll be providing the other courses also on the mobile app, so you can download it from the Google Play Store. KSJ Teaching, search KSJ Teaching, you will easily find it. Okay, so see you guys in the next lecture with the new chapter. Till then, stay safe, stay healthy. Thank you so much.